Mr. Chaturvedi also asked how a portfolio should be split between large cap, mid cap, and small cap funds. Also, should be the upper what should be the upper limit of investments in a single fund house?
Uh,
Tricky
a
question, I
tricky
think.
question. But I would say that, the way we go about defining, there is the first part of the question is pretty straightforward, because the way value research classifies all the stocks on the stock universe, 70 stocks accounting for large cap, what we define as large cap, they account for 70%. About 66,
Correct.
65 stocks account for 70% of the total market cap. Next 20% is accounted for by another 350 stocks, and the bottom 10%, which we call small cap, there are about more than 1,000 companies, small companies. So I would say that you should follow the same split: 65 to 70% into large cap, next 20% into mid cap. So 20% of your portfolio should be in mid cap, and bottom 10%, 10% should be in small cap, ideally. And you will get the finest exposure. And if you entrust it to a fund manager, you will get selectively the exposure to the full market. And I think diversifying across the breadth of the market is important. Which fund manager? I think it's a function of scale. If you have plenty of money to invested in the market, invest in no more than 4 funds of 4 different fund companies, and it can also be reasonably achieved with just 2 funds. Whether it be a tax saving fund or a small cap fund, if you have, or 2 multi cap fund of 2 fund companies will also get you that, or 2 balanced fund of 2 different fund companies will get you. The whole idea of diversification, I don't know, is there a formula to it? But the whole idea should be that if a fund manager goes out of favor, some accident happens, your money should not be completely, the whole idea of diversification is that you are hedging against the risk of something going wrong or something turning bad. So insurer, it's like buying insurance, or taking that view. At least 2, max 4.
Okay. I just want to ask you this question: Value Research website. If they go there, will they be able to find uh, all the funds listed there
Yes.
and the choice, and will they be guided through the website?
Yes, all the all the funds that are, value research online has a full coverage of the domestic mutual funds. So you will get information on every fund classified by category. But I think, better way there are 2 ways of looking at it. There are investors who are exploring funds to buy, and they have no exposure there. So you can, value research online helps you do it yourself. The other is, there are a lot of investors who have bought something or the other, and they need to really get a sense, get a control or pointer to how they should go about doing it. Set up your portfolio at Value Research Online.
Okay.
You will be able to track your portfolios better.
Will they be guided as
They
well?
will be no, you will not be guided, but you will get a lot of hard work being done by the website in terms of getting you pointers, because the whole idea of Value Research Online is to help investors do things themselves. We tell them how to go about doing things, but we would like them to do it themselves, because Value Research Online or Value Research Company is not an intermediary. We are aggregating information, we are doing all the dirty work, or all the hard, not the dirty work, but hard work, putting things in
So
perspective,
that
helping you
DIY
understand.
can be done by the
Yes,
investors.
investors can do it themselves.
Okay.